So my name is Robert Sinn, and it's a pleasure to be speaking here at the forum for the third time this year. It's also a pleasure to be in Vancouver at such a great time of the year when the weather is absolutely stellar. And I'm coming from South Florida, so that's a big statement. You can see the title of my presentation, Pitfalls, Red Flags, and a Copper Explorer, set up very nicely for the summer. When I was thinking about what I would speak about here at this conference, I thought, well, gold, technicals, market macro, maybe I could talk about yoga or not. But I wanted a little bit more of a timeless topic, something that you could take and use for years or maybe a lifetime. Some things I've learned through 20 years of investing in the junior mining sector. Some pitfalls and red flags I've learned how to identify. So let's get started. Forward-looking statements. I'm not going to make a whole lot in this presentation. Most are backward, looking. Although at the end, when I talk about my stock pick, there might be some forward, looking statements. So most of you know this quote from Warren Buffett. The stock market is a no-called strike game. You don't have to swing at everything. You can wait for your pitch. So we call that pitch a fat pitch. It's the one that hangs over the plate. You can watch it as it comes in, and you can swing hard and knock it out of the park. That's baseball. In the stock market, it's a little different. There's virtually unlimited amount of stocks that we can buy, that we can trade, especially in this day and age, right? There's so much out there that you can participate in. So actually, the real challenge for an investor is to say, pass. That's too tough. I don't think I have an edge there. Or maybe it's not even I don't have an edge, it's just a bad investment, right? So spotting those and narrowing down your list of companies, stock ideas that you actually want to focus on. I recall my father when he was at his peak of investing in the sector around 2007. He had 75 stocks in his portfolio. And this was like an 80-year-old man trying to monitor 75 stocks. Is absolutely daunting and frankly impossible and not very effective. And he sort of paid the price for that in 2008. So we really want to narrow down the amount of companies that we focus on and wait for the fat pitches, the really good setups where there's no red flags. And a few years ago, I wrote a bunch of blog posts about red flags in the junior mining sector. And I identified 12. And these blog posts were probably about a total of 10 pages. So it's too much to talk about all of it today. But you can see the ones that I've posted there. I'll touch on a few and then focus on a couple. With smearing of grade, this is something that was much more common like 20 or 30 years ago. A little less common these days. But basically what it is a company might have, like an intercept that hits 1 meter of 100 grams gold. And then they actually will put it out to the market as we drilled 100, meters of 1.3 grams gold. The market likes the 100 of the 1.3 a lot more than the 1 of, 100 grams. And the reason why, that 1 meter of 100 grams might be at quite a deep hit. So you might have to get through a lot of waste rock to get to that 3 ounces of gold down deep. So really, it's not economic. But if you report it as 100 meters of 1.2 or 1.3 grams, it looks like it is economic. It looks like you have a big ore body. You have a mine possible there. So how a company puts out its news to the market tells you a lot about it and their integrity, right? So we want to focus on that. Missed milestones is a really big one. In 2023, I can't recall a year with so many companies late on putting out important news to the market. And at the end of the day, it's not the investors that are setting these timelines, it's the companies, right? The management teams will say, we'll have a PEA by March. And then the PEA comes in August, right? Or we're gonna have a resource by May, and it comes in October or something like that, right? And a missed milestone, maybe a month late or 2 months late, by itself is not a huge red flag in my book. Stuff happens, and there's a lot of things that are outside of the company's hands. But when it becomes a trend, it's not a good sign for the quality of the company, right? And there's a lot of missed milestones and late timelines going on in the junior mining sector right now. Another one is a large cult following. And I'm gonna delve into this a little more, so I'm gonna just skip that right now. We're gonna talk about buying and selling by insiders. So naturally, in the junior mining sector, the company management teams are long of their stock. That's just how it is. So they're naturally gonna be sellers at some point, but the question is when and how they go about that selling. At what prices, how much are they selling at a time? Is it multiple people on the management team selling at the same time? There's a lot of clues that we can get from the insider activity. In Canada, the policy is you have 5 calendar days to file your transactions if you're considered to be, an insider of a company. In the US, it's only 2 days. But in Canada, if you're later than 5 days, you just pay a fine. It's not necessarily a huge amount. And sometimes if somebody's selling millions of dollars of stock, they might not mind paying a $10,000 fine to file a year late. I'm going to show some really bad examples of that in a second. All of the insiders, especially management and CEOs, know that when they file a sell report, people are going to pay attention to it. They know that. So for them to make a big stock sale is giving us a lot of information. It means that the value they're getting for their stock is so good that they're willing to deal with the bad optics of the filing, right? So that's usually a sign that maybe the stock price is a little high, okay? And especially when it's multiple company management teams selling at the same time, it gives a lot of information. Another thing that I like to look for is when a stock is performing really badly. Like let's say the chart is just straight down from the upper left to the lower right. Month after month, it's grinding lower, and there's no insider buying, none. They're not selling, but they're not buying either. They're doing nothing, right? So they're not really inspiring confidence in the value of the company's shares, even though those shares might be down 90% in the last couple of years, right? So that's giving us a bit of information as well. So that's something I also watch for. So some notable examples of insider selling. EMO. This was a big high flyer in 2021. The stock went from something like 25 cents to $4 in less than a year. And the president of the company started selling in November of 2021. You can see multiple reports extending all the way to the summer of 2022. I believe he sold over 600,000 worth of stock in total during that time frame, and there was no insider buying to speak of at all during that time frame. And again, he started selling after a more than 10x in the stock. And when he was asked, I didn't ask him, but somebody asked him, "Why are you selling?" "I have to buy a house." And being in the sector for as long as I have, that's the most common excuse that people use for why they're selling their stock, either to pay taxes or buy a house. You hear it over and over again. At the end of the day, it doesn't really matter what the reason is. It's their right to sell their stock. It's their shares. And if they file it on time, it's totally, legal. There's nothing wrong with it. But as an investor, I also don't need to continue to hold the stock, right? I can sell too, the same way that, he sold. Another example, Wesdome and Skeena in March of 2022. So if we think back to March of 2022, gold went on a nice run there. War started across the world. Gold jumped above $2,000 an ounce for a brief period. A lot of gold stocks had a nice run in February and March. And there was a lot of insider selling in a lot of gold mining stocks in March of 2022. These two stood out to me. In Wesdome, there was an extensive amount of transactions, all on the sell side by management team. A lot of them, they were, exercising warrants, so that explains some of it, but just the volume of activity, the number of transactions, the number of people selling, over $5 million in a month, stands out. And just take a look at what the chart did over the next year. Skeena, CEO, was selling March and April of 2022. Look at what the stock did in the subsequent months. Sometimes they're very good, with their buys and sells in terms of timing. Sometimes they're not always so good. This is Skeena again, and this is the VP of Exploration with a really late filing. From August of 2021 and March of 2022, total of more than, I think that's over $5 million in total. And that really stands out because that's such a late filing, and it's a very large amount by, management, and it's just not a good look. And we saw the Skeena chart on the previous slide. But nobody has a crystal ball, and sometimes even the biggest, winners, in the sector see a lot of insider selling on the way up, and it doesn't mean it's a sell. So this is a great example. The biggest win in the sector in the last 5 years was Great Bear, 50 cents to $29 a share with an acquisition by Kinross of almost $2 billion. This is what we look to when we say, why are we involved in the sector? It's for stories like this. It's for these massive, windfall rises like this. And insiders were selling Great Bear all the way up. Obviously, the CEO held on to most of his shares. And we can't blame him for taking some profits on the way up. So you have to really look into the details of the selling and put it into context. Another example, Cantex, massive run in the stock in 2019. In August of 2019, the CEO sold 80% of his shares. And again, when asked, I need to pay my mortgage. Copper Mountain, an egregious late filing by the CFO, and he was fired the very next day after he made the filing. Over $3 million in sales in 2021 and 2022, filed in August of 2022. And you see what the stock did subsequent to his sales. Another example, like this is, I don't even want to really go into this, but just some really egregious late filings here in this company. And you see what the chart did. So next red flag that we want to look out for are cult stocks. These stocks that capture the imagination of a massive number of investors. And if you go on the chat forums, everybody is bullish. Everybody's making grand proclamations of what's going to happen and how much profit they're going to make on their investment. They can't see it any other way aside from with rose-colored glasses. And it's very dangerous in markets, period, but especially dangerous in junior mining when things can go wrong. And when we set really high expectations, it's really hard to jump over that high bar, right? It ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so. And that's why we should really focus on being as objective as possible and not trying to seek out confirmation bias over and over and over again. And really, that's all the markets are. It's a game of, expectations. When expectations are low, the possibility for big upside is there. When expectations are really high, the risk is usually the highest. So it's dangerous to chase popular stocks with really high valuations. And every year we get 2 or 3 cold stocks, in the sector. The 2017, 2018 time period was particularly abundant in cold stocks, and one that stands out from the pack was Novo Resources. I'm not going to go into the whole story because I just don't have time. I think all of you probably know it to some extent, but more than $1 billion market cap at its peak in late 2017, got a big investment from Kirkland Lake Gold, was once a very large gold mining company that no longer is around because it was bought out. And everybody got very bulled up on Novo. I admit I owned the stock a couple times around that time as well. I didn't hold for the downfall though. The problem with Novo was really high expectations. People were saying it's going to be the WITS 2.0, 80 million ounces of gold possible, yada, yada, yada. The problem is a coarse gold system, so not consistent. When we think of coarse gold systems, we think of, alluvial mining. And there's a reason why big gold mining companies don't get involved in those kinds of gold projects, because they're inconsistent and it's hard to put economics on them. And that's what Novo found out in 2018. And you can see what happened. So the massive run there from mid-2017 to October 2017, just absolutely incredible move. If you caught that, good for you. But then at some point in Q4 of 2017, the expectations were so high, there was no way that they could really exceed what the market was expecting when you have a bar of 80 million ounces to jump over. Absolutely impossible. So they put out news in November, the stock gapped down. You can see that gap in the chart that's still there. And then Cometwell, results at the end of May 2018 did not meet the expectations of the market. Another gap down. And the next 5 years, were spent moving the goalpost by the company and jumping from project to project. The stock is now 24 cents. Hell of a roller coaster ride, minus 97% from its peak. But it's not all bad news. So let's talk about a stock I like, which is Kodiak Copper. Chen talked about them on Friday. KDK is the symbol in the TSXV. And as far as I can tell, Kodiak doesn't have any red flags. It checks a lot of boxes, in fact. A lot of insider buying in the last year, strong financial backing with Teck holding a 9.9% stake in the company that it bought at a much higher share price than the company is trading at today. Quality management team, including the former CEO of Great Bear, tight share structure, plenty of cash in the treasury, $12 million at last check, and they are drilling. So you have an aggressive program of summer drilling, 25,000 meters ongoing. They've got one rig going now in the south part of the MPD project here in BC, about a 3-hour drive from Vancouver. They'll add a second rig in June. So the combination of a tight range-bound chart, consolidation, sort of bottoming out around 75 cents, and a year full of news flow, really, it's a very attractive, setup for KDK. Here's the insider activity. You can see it's all on the buy side, including from, Mr. Taylor himself put in $250,000 in the April financing at 96 cents a share. KDK closed at 73 cents on Friday, so you get it at 20% off. The right neighborhood in BC. So their project is between Copper Mountain and Highland Valley, 2 large copper mines that are operating. So this is the sort of project I like, because if they hit, this could be a mine. This is a place where you could build a copper mine, no doubt about it. So you get paid if they get some joy with the drills, all right? They've only drilled 3 of 18 targets so far. Right now they're drilling in the south end of the project, but they'll be moving up to the Man target later this summer. And Man is particularly attractive to me because you have big soil anomalies at surface, copper and gold. It's only been drilled shallow, in the past. So it's never been tested at depth. So it's a perfect setup, just like Gate was when they drilled that 3 years ago, where it had not been tested at depth. And they hit some really nice holes there at Gate, including like 500 plus, meters of 0.75 copper, which is a nice intercept, very nice. You can definitely make a mine with that. So let's hope we get more like that here in 2023. Chargeability high at depth as well. So there's a lot of smoke at Man, and they will be drilling that this summer. It's a very nice chart setup, consolidation, and let's stay optimistic, but not be stupid. The life is too short to own stocks with red flags. Thank you very much.